TGIT, everybody. Thank you. Thank God it's Thursday, which means you know what. How's everyone doing? Brock, Hugo, Ryan?
Morning, Dale.
How are you?
Not too
Brock's
bad, mate.
talking.
You?
Huh?
How are you?
I'm doing okay, buddy.
Good, good.
So, I'm looking at Brock says there's a Head and Shoulders top, inverted on Ethereum. And the story of the day yesterday was that the dollar faded pretty good, just to go backwards, just to show that sometimes, I know some people don't like oscillators. Paulie says they're ridiculous for just, something could say overbought, oversold forever. I agree with them, but back here, we had a confirmed high. Okay. And so I felt there had to be, I was looking for one more high that wouldn't confirm, which was up here. And, we had a nice reversal from there, and we're actually lower on the week now. See that candle? The only other, and this was something, we're talking about yesterday, that we could end up with a reversal week to the downside, which we are. The 2-week off number need to close under 94.07 by Friday to get a 2-week reversal. And then there's only one more bearish thing the market could do, would be take out last week's low at 93.67. So we're about 20 pips away from having an outside week to the downside. The only thing I don't like is it's being led by cable rather than being led by euro. But I know that euro bear Ryan Littlestone is pretty happy about that we're finally getting this to happen here. Yeah. So yeah, pretty negative week in euro pound. And yeah, go ahead.
It's a little step here. We're getting through that 70-80 zone that's been plaguing me for months. But we've got that August low at 50, which we're at 50. We've been down to sort of 55s or something.
Yeah. Okay.
So that's when you want to see something go. In this case, it's small steps. So we're through the 70-80 level. If we see that becoming resistant, which it's looking already like it is, then we should get a crack at that 50 level, get under there, and hopefully run our way.
Okay. Also, the metals took off yesterday. We'll see if there's follow through. But very strong day yesterday. Yen's up a little bit, so I would be a buyer on a pullback in the end. I actually saw a count that could take it to above 116 before it's over. And we still have risk on in equities. And the NASDAQ took out that, moving average trend line so far above 14.9. So tough to fade this. I felt that a weaker dollar, lower yields would support the market. And that's what's going on. One other thing I want to show you, what I just showed you in the dollar on the 2 hours, that we needed one more high to attempt a short. I have the same thing happening on the 2 hour in oil. So if you could see this high up here, the high that we made was confirmed. So if we get a new high over, 82.15, maybe 82.50, 83, and the 2 hour is here underneath 70, I'll attempt it. Plus, this is interesting. CAD is at the 61.8 level right here.
Yeah.
From the whole rally.
I was looking at that in the room earlier. We got a bit of support into that and down to 123.50.
Okay.
I think under there it gets a bit
Yeah.
It's a bit holy, if you like.
Well,
you know,
yeah, 78.6 is 122. I'm thinking that, you know, if I'm right about crude is close to topping, and then Canada might be close to bottoming. So, you know, next week I'll be looking for it to do something right, which it isn't doing right now. I mean, the RSI readings, you know, they're diverging, but at 26, I can't do anything about that. And the 2 hour isn't. So the first one to start diverging will be the 15-minute, and it's trying to. So it is going to have to do a little work. But that's kind of what I'm looking at next, is a short and crude long in Canada in the next week or so. So that's all I have. Stella, are you around?
Hello, good morning, everybody.
Good morning.
Morning,
So I missed the silver. I don't think I'm going to be able to buy it where I wanted to yesterday after yesterday's action.
Well,
what do you think?
It's metals are doing well. You know, I'm not. I don't think we're out of the woods for us longs. I mean, but it's definitely encouraging. Yeah, and they're up again today, so you know I'm keeping my longs. That's for sure. But I still think that there is still a chance of one last flush, maybe taking out the lows. But
Okay.
we're now running quite a bit far from them.
Yeah.
But yeah,
Decent week. There's the weekly chart is up there. It's a decent week, and you know, I was looking at this gold, and normally in Edwards and McGee, this is a descending triangle, flat bottom, descending top line, which is normally a bearish reversal
Yeah.
formation. But
Yeah.
you could also break out.
Well, the good thing is that we're tightening. This range is tightening. You know,
Yeah.
you have this horizontal line very well there, the blue line.
Yeah.
That's where you break down, and
Right.
you have the like the wedge line, the resistance line, which
Yeah.
is now closing in. So the good news is that we're going to get resolved one way or another. You know, the $1 million question is which way. Now we did have the minutes yesterday, and the Fed is telling us that they're going to keep going, and they're going to continue with the tapering. And from what I understand, and I think Goldman are saying the same thing, is that they're going to start tapering in November.
Goldman.
I know.
Just posted about that. They put out a note after the Fed minutes that said they're going to start tapering NOV or DEC. Goldman put out a note saying, "Oh, we expect the Fed to start tapering NOV or DEC." Oh yeah, cheers, thanks for that.
Yeah.
Well, if we get through this upward line, to me, I would be looking for the highs to be challenged over 2000. If we got over, it looks like 1850 or so, maybe by year end.
I agree. And you know what? The thing is, it's not what they're going to do, it's what the market thinks they're going to do. What are we pricing now? And the market pretty much knows that the Fed is going to be tapering by, what is it, 15 odd billion a month. So that starts in November, maybe December maximum, and it finishes sometime mid 2022. The question is, what happens if they don't keep up with that pace? Then metals are definitely going higher. But the other thing which I want to say is, I've said this so many times: the dollar rates, real rates, yields, equities, they can all have a short-term effect on metals. So when the dollar rallies, metals go down. When yields go up, metals go down, etc., and vice versa. But for me, the number one driver in the medium term, because this is what I look at, I don't look at daily or weekly moves. My horizon is much longer term. For me, the number one factor is the change in money supply, and that we are still in ridiculous levels of easiness. Can you say that? Of monetary easing? Yeah. And I know, yes, they're going to be tapering and they're going to go down to zero in the purchases, but we're still at zero rates or close to. And it's these are supposed to be how should I say it?
It's
measures.
Not tightening.
These are supposed to be measures for an extreme situation which lasts for a short time, and they've lasted for 12 years. So this is, for me, this is the main driver. And yes, if the Fed is more hawkish than markets expect, yes, metals are going to get, going to see one more leg lower. But if you look at the grand scheme of things and you look at money supply, the way it's exploded over the past years, metals and gold and silver should be a lot higher. That's my mathematics 101 view on this. Yes, we have cryptos who have taken a lot of the shine, pardon the pun, of gold, but that also is it's quite the flow has already a lot of the flow has already gone into cryptos. Yes, we might get more, but we've seen the big obstacle, I think, is behind us now in terms of cryptos. But anyway, it's a difficult few months ahead. We have PPI today. We have a lot of obstacles to overcome. Employment needs to pick up. We get another couple of bad payrolls numbers, and the Fed's going to be singing a very different tune, I think. So,
in light of tapering, the bonds are putting in a pretty good week, which is counterintuitive.
Yes, yields are going down. Yes, so where are we? 155 in tens or something like that.
Yeah.
And I've said this so many times, right? I've said unless we break an important level like 170, was it 170-ish?
78
I think
was high.
That high. Unless we break that high, I think we're still in the range, and that's the end of that. Obviously, if you're a day trader, you can look at things differently, but that's the way I look at them.
Well, good morning, guys. How are you?
Hey, Blake.
Hello.
Hey.
Good morning.
I'm always in that. If I get stopped out of a trade, which I did in the U.S. dollar Norwegian krona, it's probably time to bounce. And I just got to say that. I got to throw that out there today. But you were bringing up, you were talking about a couple of different things that I want to comment on. And one of them was regarding gold. I mean, gold's broken higher, but we are testing pretty key resistance today. And I have to say about gold, and you guys have heard me say this, I'm surprised it hasn't moved higher, for the last several months.
Same here.
Mean, it's one of those things where you just go, how come it's not going higher? But everybody I've talked to has been uber bullish. I mean, I haven't talked to one gold bear out of all the people that I've interviewed over the last, month or so. So month or two, rather. You just don't meet any. Everybody says the same thing. I'm bullish gold, but we can't figure out why it's not going up. But I'm bullish. That
interview Henrik Zeberg.
I haven't, and but maybe
you said you haven't found that you want to talk to a gold bear. Go ahead, interview him.
Okay, all right, I got it. But the thing is we are breaking higher today, or after yesterday, and yesterday's move was pretty surprising to me. I mean, I guess what was most surprising. Let me start with the dollar. What was most surprising about yesterday's move is the whipsaw action that we saw. So, following the news, we got this rally in. This is following the CPI yesterday. We got this rally in the dollar, and everything else did the exact same move, just differently. So we got a sell off about after we were done with face. Excuse me. Then we got to bounce back, and it looked like we were just back to where we had started, from after the news. But then the dollar, continued to slide throughout the course of the day, and that's when gold really took off. And going to gold, we finally broke, and this is my chart of the day yesterday. It's like, okay, well, we got the inverted head and shoulder pattern. We broke out. We closed above that 1782. This is what you would expect. Okay, we broke above the 1782 level. Now we're off to the races. Today, we're testing this downtrend line, this descending trend line that comes in just above the 618. And as I pointed out on the week or on the, the chart of the day, this is the 200-day moving average. This is going to be pretty important today. Now, I'm bringing this up for a reason, because we have producer prices today. And how do you guys feel about the PPI data? Because CPI is one thing, producer prices is another thing. And, there's obviously been a lot of disruption in the supply chain globally. And this is not new news, but how about if the PPI number comes in a little stronger than the market expects? You look at what, the market expectations are, just, pull them up here on the calendar. That was yesterday's CPI. Here we go. Today, where is it? Did I just miss it?
We're expecting
I'm on Friday. Sorry.
8.7% year on year. We're expecting for PPI.
We're expecting what year on year?
8.7% for PPI year on year and 7.1% year on year for core PPI. These are pretty. They're double basically the highest reading of the past decade.
Yeah, I mean that's pretty crazy, right?
Yeah.
I mean those are pretty insane numbers. And how about, does the market take notice of that? What do you guys think? What are your thoughts here?
They're fairly volatile. PPI is a very volatile number. You can see it swing to 10%, 15%, as much as you can see it drop to 5%. Because it's so energy orientated and it's at the spike end, if you like, of prices where prices are sharpest. Obviously, CPI is a basket of everything, so that's why it's not as volatile looking. But the shock right now for any pricing is the downside. Everyone's expecting higher inflation. They know it's here. So, if it comes out at 10%, the market's not going to get too excited about it. Okay, here's more inflation. Here's stuff that's less transitory. If it drops to 5%, something like that, then perhaps you go, oh, hang on a minute. This transitory thing might be in play. But it is a volatile number.
My view is that the Fed is telling us what they're going to do, their course pretty much. And the risk now is not for them to do more. The risk is for data or for something to happen to make them do less. I think that's the risk. So I agree with Ryan. And, look at the forecast. The forecast is for a big jump from last month's reading, which was already a big jump from the one before. And there are many reasons for that. The supply chain is broken. So oil is also, going to the moon. Everything is going up and producer prices are going to reflect that. That's a certainty. The question is, are we now starting to look at a pace of increase which is higher than what's actually going to happen? I don't know, but I think the risk is now for readings to start coming in a little bit softer. I'm not saying they're going to be low, but I think they're might be a little bit softer than expectations.
Really, I actually think I think in that thinking, I think it's a little premature.
It might be, yeah.
I think it's a little premature. And that's just because I guess maybe the conversations I have with my wife daily about her business and and prices that she's feeling from the distributor level, right? So I don't know. But it's going to be really interesting because this does trickle down to the consumer, and that's the one thing that you have to keep in mind. I want to turn your attention over here to equities. So the S&P is obviously stronger, but we are knocking our head up against pretty key resistance here. This is a key wedge. Now, the other interesting part is if we can hold this, because this is the 618 retracement right here that held at the 4320, we start breaking above the 44, I would say 2025 level, there's a good chance that we trade back up towards 4,500 and maybe even back to all-time highs. And, if you take into account what's happening with all these yen pairs, it's hard to argue that point. You got the euro yen that's higher. You've got the, you got the guppy, which is, nearing its trend highs. The Canadian yen is trading at 2017 highs. Actually levels we're seeing at levels we have not seen since 2015. That's crazy, right?
Yeah, I think it's got what we call double bubble. It's got the weakness of yen. We got the strength of oil feeding into CAD. The same for dollar CAD. It's got USD weakness today as well as the oil thing. So, if you want a perfect storm, CAD yen is the one at the moment.
Yeah, and you guys were talking a little bit about the yen earlier, and I have to mention this that with rates over the next couple of years looking to move globally, but let's say minus Japan. We are going to be entering a really nice carry trade environment for these pairs. And I am a buyer of dips on any of these yen pairs, on any significant dip. I mean, I'm going to be, and I'm gonna just kind of sit in them, because as long as equities don't, and I made this point, I think a couple of days ago. I'm not sure if I did it here or, or on one of our private webinars, but I think we're going to be in a carry trade environment as long as stocks don't come down too aggressively. I think, if the S&P retains the 4,000 handle in the months ahead, I think you're going to be able to sit in these yen pairs and really capitalize on the higher rates globally and the lower yen. So I'll be playing these to the long side for a while, I think. But that's how I'm going to approach all of these yen pairs. So as we come into producer prices and the PPI data, Dale, you mentioned that the dollar Canadian is at as support, and the dollar Canadian's had this nice little fall. We have found a confluence of support here. Matter of fact, I'm playing off of that level. I told people last night I'm going to stick a bid at 123.80 overnight. I got hit. So here we are. This is not only the 618 retracement, but also the 127% extension of this move, of this last move higher. So, and you can see, by the way, relative strength is it's oversold intraday and also divergent. So, I'm thinking that we should get some sort of bounce here in the dollar Canadian sometime today, I think. And also, I guess we should probably mention in the same breath that crude oil happens to be at pretty key resistance here. We're following this channel higher, trying to hit new highs, and I think that crude can trade up towards 82.50, 82.60, but we are going to probably run into some near-term resistance in crude. But it's bullish while it's above this breakout point right here at 78. So it should retain its bid. But you guys know, we don't go straight up or straight down in anything. So it'll probably be finding bids on the way back down. One of the other things I wanted to talk to you guys about really quick is a conversation that we were having in the chat room just a little while ago. What's the primary driver? What would you guys say is the primary driver of stocks?
Yields for me.
You think yields?
Well, that's been the driver since 2008.
Okay. Right. All right. Well, how about the near-term driver? What do you guys think is the near-term driver of stocks?
Dollar yen? I don't know. It's
earnings.
A tough one.
Earnings.
I think so.
Earnings
matter now.
Larry Kudlow,
I think earnings.
Mother's milk.
But
Earnings always matter.
At these valuations, earnings, well, whatever. I don't know.
I mean, I know we can have that argument go around the horn as far as earnings, with the expectations are too low. But
Dominic wrote a very nice comment. It matters if they beat only.
That's true.
Nice one.
But earning, well, the thing is, we're kicking off earnings season, and we've seen earnings come in handedly, and K-Man, from Ryan's crew, he was like, earnings have been good, and yeah, it's early on in the season, but earnings have come in stronger than expected, and so as long as earnings continue to stay strong, it's hard to see stocks really come off in any meaningful way, shape, or form, I guess is the point I wanted to make there. But what are your thoughts on that?
Yeah, I think you're right. You got to take this, let's call it the short-term noise. Stocks they've been softer, as you can see from the chart there, but we're in a bit of a consolidation period at the moment. And I think the stocks for the longer term are thinking, what's going on with these hikes? Is it going to collapse the economy? Is it going to stymie the economy? I think that's going to be the worry over the next few months. But as you say, you trade the levels, and S&P's right up against your level there. And what you're going to do? You're going to try a short into that, or trust the earnings are doing well, and perhaps we're going to get a break a bit higher to that next high.
Yeah, I think and that's it's funny you say that, Ryan. One of the guys, actually one of the traders that I would say the best trader over at the old shop that I traded at, the last few years, he'd always just say the same thing: trade your levels. You see the level you want, take it. You know what I mean? So when you're looking here at the S&P, I think there's a couple levels that are of importance. One would be this current, and again, trend lines are interesting, and this is why you never use them solely, is because you can manipulate them to fit your narrative, right? So that's why I like to have a few different trend lines, whether it's through the wicks or through the bodies. This way I kind of know what I'm dealing with. Like for this descending trend line, you go, okay, well, I think there's good resistance here. Great. We held the 618, fantastic. So where is resistance? Well, then that's when you start going from the high to the low and saying, okay, well, we have the 50% retracement right here at 44.10. So, now we have more of a confluence of not only the trend line, but also the trend line and a fib level. I should actually make this a different color so you can see it. So not only do I have a trend line, but I have a fib level right at the same, or 50% retracement right at the same spot. So now you start to build confluence at those levels that are important. And for this example, I think if you're a bear in equities, you probably should be shorting right here. I mean, because this is your best risk reward, right? And I'm not taking a short right now. I'm just telling you, this is from a risk reward perspective. This is where you would say, okay, well, I keep grabbing the wrong thing. Sorry. This is where you risk, you're risking this to make, somewhere down here. So if you're trading it right at this level, this is where you're short, you're risking maybe 15 points to make, move back down here. Are you trading your levels?
Yeah. Good risk
right.
Reward.
Right. So the risk reward. So, it depends on your narrative, and everybody's got a different narrative, whether you're net bullish or you're net bearish, however you decide you want to approach the market, it's all about finding what Ryan just said, the levels, and then what the what your stop and profit target's going to be. And I always tell people this, whatever your risk reward is, always find a very high multiple, because I guarantee you're not going to make it. So what I mean by that is, shoot for a 1 to 4, 1 to 5 risk reward ratio, because I guarantee you're not going to make the 5. You're only going to make, less than that, because what's going to happen is you get into a profitable position. You're going to start taking part of your profits off the table to book profits. And then you end up net making less than your, 1 to 5 risk reward ratio. You might, let's say the S&P turns lower here. You might book some profits here, and here. And by the time you're all said and done, really your average price ends up being right around here, which means, you still had a good risk reward ratio, but it diminishes because, people get, you book profits. I mean, you should be booking profits. Don't you guys agree?
Yeah. So it's also important not to let risk reward solely guide your trading. Don't just trade because you got a 10 pip for a 50 pip, risk reward. Don't let it govern your trading. That's just part of the parcel of your risk management, your trade management. Because some people can get too stuck up on risk reward, and they'll
and that's why you have to combine them with so many different things, right? What is what's the macro idea about it? By the way, we got producer prices coming out.
Yeah, I'm just gonna get ready for that.
Yeah, it is coming out right now. Let me grab my, dang it, where did it go? Stelios, you're supposed to be giving me these heads up.
We still have like 40 seconds. Come on, man. It takes, look how long it takes me to adjust my charts, for crying out Christmas. So anyway, going back to what Ryan and I were just talking about. Yeah, it's risk reward. You got to have a bias. You got to, see if you have a theme that's behind you too. Here, I'm going to put it up the dollar yen. Let's see what producer prices come out as. How much time we got, Stel? 10 seconds.
All right. Monica says not to dream too much. Yes, that's exactly right. You can't be obnoxiously over.
Okay.
Oh,
Oh, slightly
coming
worse. See?
Oh man, stocks are going to all-time highs. Here we go.
Told you, man. We're starting to get
All-time
that
highs
point.
in equities. Here we go. We will see 4,900 today in the S&P. Just kidding.
Jobless
S&P
claims.
should retain a bid here, though. We should trade back up towards 44.10, 44.20 now.
Yeah,
I would think
it's going to keep pressure on the dollar.
Yeah, for sure, absolutely. So,
not much of a change though in PPI. Nothing really to get anxious about.
no, but it should keep the bulls, dollar bears, stock market bulls, content. How do we put it that way? Content.
Where do you think the Dixie's going now, Blake, that it broke your wedge?
Right here. I think right around this level support, this 93. This is the support that if you guys recall, way back here, this is a lot of support through here.
That was like a breakout.
Yeah, this is 93.50 to 93.70. So, yesterday we said, hey, broke the wedge, should come back down to 93.70. This huge support right through here, because remember, this is the breakout at 93.50. There's 93.70. This is all support through here. So I think the dollar is going to find all sorts of buyers down at these levels. And, because that 38% retracement, we had a chance to break, couldn't do it. It's a big monthly fib. So now, don't forget that, people like to try to get bearish the dollar, and they've liked it. They like to try to do that all year this year. And we kept just surging into new highs into 2021. And I would not be surprised if the dollar eventually breaks above 94.50, but it's getting back down towards support right now. So, you have an interview today?
I do, except the guest hasn't contacted me and Kevin isn't here in the house.
Oh, well, the problem that we have today, Steve is not here. He's fighting the rain with his son. So let's really quick address Justine's question. I'm quite confused with yield stock correlation. If stocks are high, it's risk on sentiment. Hence, the yields will increase as well. However, dollar index and yields are also positively correlated, wherein the dollar is high, a negative effect to stocks. Can you explain this? Well, it's like everything in the market, Justine, and Stelios, I'd love to hear your explanation of this. The dollar tends to be positively correlated to yields, but it's more of the dollar yen. But it's more to it than just yields. And there is a point where yields are, they're positively correlated to stocks. But once yields get to a certain level, that's when people start to say, okay, higher yields is great for a while, but now, now it might start to weigh on growth and money supply, and, people might turn their money elsewhere. So, there is a point, and Stelios thinks it's right around 170 on the 10-year, right? Stel, is that what you're thinking?
Yeah, 170 to 2. Really, that's the area where trouble is going to start.
Yeah, because what happens there? I mean, I'll tell you what happens there. What happens there is baby boomers, right? I have a mom who just recently retired, and she can't put money into the bank, right? What's she going to make in the bank? But at what point do the risk outweigh the reward, where yields start to move higher and savers go, I need to put some money back into savings. I want to pull money out of the market. And there is and Stelios, I think, is probably very correct in the 170 to 2% range in the 10-year, where it starts to shift. And it's not necessarily baby boomers. I'm using that as a example. I'm just talking from more of an institutional standpoint, right?
I actually had a conversation about bonds with a friend of mine who has a significant amount of money on the side. And he says to me, look, I need to find something that gives me 2% relatively risk-free. And I said, well, that doesn't exist at the moment. You know, he was talking about bonds, and he says, well, when it does, I'm gonna definitely take that. So, you know, and I've had this conversations with a lot of people, and at these levels where, you know, anything that's relatively risk-free, if you take away commissions, fees, taxes, all that, it's going to be zero. So at these levels, there's no point. But once you get to, you know, something like 2% or whatever, you know, I'm just saying an approximate number, then it starts getting a little bit more attractive because we're used to all these years of getting nothing. Right, that's the problem. Yeah. That's the trap. I remember, you know, 15 years ago, 2% was a ridiculous return. You wouldn't even consider it, and now it's a dream.
Yeah, I think the last time I bought a certificate of deposit, a CD, was about 15 years ago. Yeah,
there you go.
Yeah, I mean, personally, that was about 15 years ago. And yeah, but go ahead, Ryan.
Yeah, sorry. What people also need to realize is that, you know, if taking a big wide view, we're talking a potential fundamental shift in rates, yields, markets, and that drives big flows. I mean, I think that's a lot of what we're seeing in yen at the moment. We're seeing some big flows because you've got people who want to hedge against this inflation coming. You know, we heard about it yesterday with UK linkers. People, pension firms in the UK, they're having to hedge inflation in other currencies like Aussie bonds, and so you get these big flows coming around. So the correlations break down in that sense, because take something like yields. If you take it from the point of view that for the last 10-15 years people have been buying US bonds because the Fed are a backstop on yields, once that changes, where's the money going to go? There's no point in keeping it in low yielding US bonds. There's no risk anymore. We're over the crisis, more or less. Where's your money going to go? And then money starts flowing into different assets. Maybe it goes into stocks, maybe it goes into high risk assets. But these giant flows are what really drive FX trends. They're the big stuff. They're the thing that takes dollar yen from 109 to 120 in 6 months. And it's understanding those fundamental flows alongside what happens every day that traders really need to understand and get their teeth into.
And, you know, one of the things I'm gonna commend, this is our ForexAnalytix chat room, guys, just so you guys can see it. But if you go into the Forex Flow live room, which is the FFL room right here, there's a lot of those types of conversations that go on. This is just today, you know, this is, you know, types of conversations that go on inside of the FFL room. The Forex Flow live room is just a lot of the fundamental stuff. So make sure you guys jump in there and take advantage of that. You know, a couple of comments that I want to mention really quick, and maybe Stelios, you might be able to. Jose asked or said, David Brady, Global Macro, talked years ago about a scenario where rates need to be capped and metals would soar then. Who's gonna cap rates?
By the Fed or what? I don't know. But if they are capped, then definitely assets like metals are going to soar for sure.
Yeah, I mean, is there a point where, you know, where central banks have to cap rates? I mean, I don't know.
Well, technically, they're capping them already, aren't they? They're buying the crap out of them. So
true, and I guess, yeah, you know, I guess that to your point. And if you look at it, this comment was, Jose said years ago, David Brady talked about, well, you know what happened over the last, you know, year, you know, we've seen, or since, you know, 2000, well, since, COVID, I mean, you know, gold has gone from basically 1,500 to now it went as high as 2,000, but it's come off since then. But still, I mean, you know, we've seen precious metals soar. So I guess that theoretically did really come true. I guess you can say that. There was another comment that came in really cool. Oh, somebody asked about the DAX, and I thought I'd take a real quick look at it before we go. Dale, you haven't heard from your
No.
okay. All right. Sounds good. I just want to make sure that I'm not
Yeah.
stepping on anybody's toes here. So here's the DAX. The DAX is above the 618 retracement, but like the S&P, we're going to be, coming right into some resistance, which I think will be, watch carefully. And I have to bring up this chart here in a second. So there's the DAX. I mean, very similar to the S&P. We came out of a wedge, so we should probably have some resistance around the 15,500 level. I would say we're not quite there yet, but that's theoretically should be where we're going. One of the other things that I'm noticing here is the dollar is actually getting a little bit of a dollar starting to find a buyer down here. How surprising is that? I thought we had a little bit more left in us, down here. And guys, you have any other comments or thoughts going into today?
Not really. There's a comment by Anthony who says we're talking about yields, and he says in BlockFi you can earn up to 8% interest on your crypto with a savings account, but crypto can go 8% in a day, can't it? Anyway, it's the way things are. It's nearly impossible to get anything near risk-free. That's not zero. But no, I don't have anything. I don't have anything else to say.
Ryan, did you have anything else for us today?
No, not really. Just on your point about moves. The other thing we've got to look out for in these big fundamental moves and stuff is whether countries start messing around with their currencies with this high inflation as well. We've heard Japan talking about it, how a weaker yen serves their importing strategies that they need, the big importers. If you start getting a lot of countries doing the same thing, then we're potentially heading for trouble.
No, elaborate on that a little bit.
Just countries, trying to weaken their currencies. To try and deal with, Japan. They got a sort of free pass, didn't they, off the treasury for currency manipulators. But they're talking recently, last few days, they've been talking a lot about how a weak yen helps them out. You just don't see that escalate into something more with other countries.
It's the race to the bottom.
and remember this about yields, everybody. If you're chasing them, the higher the yield, the higher the risk.
Yep.
Okay. So, I mean, if you're chasing 8% in a 1% environment, there's a reason they're giving you that kind of rate.
Yeah, good point.
Hey, I just wanted to mention a couple comments on crypto. I bought Ethereum actually a couple of days ago. I don't broadcast my crypto trades that often because I was telling the guys in the chat room, I'm still just trying to get my head around it. But I bought some crypto a couple of days ago, and then I sold it last night as we were up here at this resistance because I'm like, I don't know if it's gonna break. And of course, this morning it just pops right through that. It just takes out all the stops up there.
But you're taking your son's trades now?
No. Actually, the funny thing is my son who's trading quite actively. He's trading more individual equities now, so he's really digging deep into some he's like, man, I love the leadership of this company, and I'm like, dude, you're 14, and
you should interview him, Dale. Get him on, Dale.
Yeah. So
is he your consultant now?
Yeah, he is. He's like, he tells me about all of these crazy ass little companies that he hears about. Yeah. It's funny.
I think that's so cool.
It is cool. I mean, he just spins his wheels. It's like he'll make a little bit and then he gets a little freaked out on it. He'll be down on some and he'll take a loss. He's learning the risk management part of it all.
What a head start he has on, it's starting back then. Can you
it's fun,
if he's already learning to take a loss, he's on the right path.
Yeah, I mean, he's smart like that. He's like, we talk about risk management all the time. And that's like the number one rule in our house. It's like, hey, you're down a little bit, what are you going to do here? It's okay to be wrong. It's not okay to stay wrong. And he's like, yeah. And so he gets that concept. We talk about it quite extensively. Anyway,
it's like the 21st century version of taking your son to the office to groom him, maybe to take over your business one day.
No,
You know what I mean?
No, no.
Either
it's
that
like-
or it's a pension trade.
Yeah, and it's people like, people always like, hey Blake, would you ever let your kids go in the military? I'm like, hell no, absolutely not. No, thank you. And do you want your kids to trade? No. No, absolutely not.
That's what
They
I
do
tell
it
my
anyway.
kids. That's what I tell my kids. I said, the reason we had you is you're going to be my pension when you're older.
Right.
You
You
know?
need to go like save the world. kid.
Yeah, I'm paying for you now. You're going to pay for me later.
Blake's got that plan B with which one is it, Roman or Christian? That's his goalie.
Oh yeah, no, that's his number one love. But anyway,
that could be your pension later. Those guys get paid pretty good.
All right. Well, hey, I'm gonna go ahead and I guess since your interview is not here, we're gonna.
I'll try and see if I could reach him and have him come tomorrow.
Okay, it sounds good. And then we will we'll see you guys and gals on the Morning Edge in about 30 minutes from now.
And shave before you go in there because these guys are sharp on the edge. All right. So
Thanks, everybody.
Thank you,
Cheers,
Blake
guys.
and Stell and Ryan. And we really enjoy bantering with you guys every morning. Thank you very
Cheers,
much.
Dale.
And
Thanks
thank
for
you
everybody
guys.
for joining us.
Yeah, thanks for joining us. And I think today might be the last day for the discount on our prices, and it's getting near the end of the week. If you've had kind of like a non-eventful week, subscribe and change things up. Change what you're doing. If you keep doing the same thing over and over again, try something else. And if you're just here in face, the trying something else would be to get deeper, more deeply involved with the community here at Forex Analytics. That's my advice to you, and that's why they call me coach. All right.
Nice words, Coach.
All right. So everyone, we'll see you for TGIF. Thank you very much. Don't just count your pips, count your blessings. Adios. You're welcome, Monica, Gorkum, Anthony. See you guys.